Alright, family. Good afternoon. Welcome to another edition of Midland Economic News. Alright, family. The time is 4:56 p.m. here in my local time where I'm at right now, family. We're going to go ahead and get it started. Alright, family. We're going to start off with CNBC Market News. Start off with the precious metals. Gold is down negative $2.20 to round off at today's market at about $17 for $1,749.50. Silver is up at about $18.80 an ounce. Copper is up $2.46 an ounce. Platinum is up to $899.10 an ounce, and palladium is up $1,980.60. All right, family. The markets across the board closed the day all up. We had the Dow Jones Industrial Average close up at 91.91 points. S&P is up 11.42 points. Nasdaq closed at plus 62.818 points. Russell's 2000 closed up at 11.34 points, and the VIX closed up at 0.72 points. All right, family. Alrighty, so let's switch over to look at some of the Euro marks. The DAX closed down at negative 194.28 points. The FTSE closed up at plus at 89.82. The CAC is she closed up at 67.34. The FTSE MIB closed up 326 points, 0.15. And the stocks 600 closed up at a plus 3.86. All right, family. Asian markets, the Nikkei closed up, the Shanghai is up, the HSI is up. All right, family. 10-year Treasury bond. We look at the bonds now. The 10-year Treasury note is up. It's just up at 0.02. The Bund, that's the bond, the German Bund, is down. She closed down today at about a negative 0.016. Japanese 10-year, she closed up. The UK Gilt 10-year closed up, and the France 10-year closed up. All right, family. So let's go ahead and get it started with today's news. All right, we're gonna start off with a big one, family. Goldman Sachs, one of the big banks in the U.S. Goldman Sachs starts shorting the dollar as economic reopenings boost foreign currencies. Overseas, they're opening up faster than we are, and their economies are getting back on track. So Goldman Sachs is shorting the dollar. This is major that a U.S.-based bank is shorting the U.S. dollar, but that's unexpected. That's unexpected, family. All right. This is coming from Market Insider. All right. Economics reopening outside the U.S. are lifting foreign currencies and creating a strong opportunity for some bets against the dollar, Goldman Sachs strategists said in a Sunday note. All right, cash assets served as an initial safe haven for investors as the coronavirus spread through the U.S. in March and fueled new recession fears. With economic reopenings taking effect around the world and new stimulus measures further lifting sentiments, the firm highlights the Norwegian krone is best suited for a bet against the dollar. All right, so the Norwegian krone, all right, family? We had maintained for some time that it was way too early to look for outright and sustained dollar downside given the balance of cyclical risk. The team led by Zach Pendle wrote, yet a steady reopening process limited evidence of a picking up in COVID infection rates. Now, and new relief policies like the EU Recovery Fund made Norway appear well positioned to outperform through the coronavirus shock, they added. All right, so basically Goldman Sachs is going to be shorting the dollar and for foreign currencies. All right, family. So get ready. They're going to be shorting the dollar. That means if the companies, the banks, starting to saying, okay, we're taking out bets and we're going to short the dollar and go long on foreign currencies. That is a telltale sign, family, that something major and big and bad is coming down to the U.S. All right, family. All right. We'll switch over to ZeroHedge.com. Key events in the coming week: the worst jobs report since the Depression, ECB, which is the European Central Bank, the Brexit, and more. All right, it's reasonable. This is ZeroHedge.com. It is reasonable. Busy week ahead. The DB's Jim Reed writes, in hot pursuit of a new office lead, the U.S. jobs report on Friday On Friday, the highlights also with interest will be in the ECB latest decision on Thursday on whether to announce more policy actions, along with the release of the PMIs Monday, manufacturing, and Wednesday, Thursday services from around the world. Finally, Brexit will return to the headlines as another negotiating round between the UK and the EU takes place. The most violent U.S. riots in decades may also continue indefinitely. Yes, family, this is taking a toll. They're now considering everything on the table, and the U.S. they coming from all media reports, they expect the ongoing rebellion here in the U.S. to get a lot more violent, a lot more lengthy. This is going to be a long haul, family. All right. On the ECB meeting on Thursday, DB expects large downward economic revisions to staff forecasts more towards our house reviews. This support calls for the doubling of the PEPP to 1.5 trillion euros and an extension to mid 2021. This may be problematic to achieve if the Bundesbank ends up being constitutionally barred from participating in the ECB's quantitative easing. The Germans have flat out had enough with the European Central Bank in Brussels. So if you hear people saying that countries in Europe are sick of Brussels, that means they're actually countries sick of the ECB, where the European Central Commissioners ain't got it. All right, family. So that's going on with that. So they expect more bad news coming week from the worst jobs week. Since the depression, they expect the ECB to be held up. Britain is about to go full board with a full breakaway, and they expect the rebellion here in the U.S. to keep going. All right. Citigroup. Citi warns markets are ahead of reality. Urge clients to raise as much money as they can before the next crash. All right, family. Citi Bank is warning its clients to raise as much cash as they can before the next crisis. Family, that is a big one. If the 35% surge in the S&P in the past 2 months seems too good to be true, as even hardcore optimists like J.P. Morgan's Marco, I can't pronounce the name, family, help me out here, KOLANOVIC, now admits, announcing that he is dialing down his optimism, while Goldman sees little upside for stock markets here. Alright, it's probably because that the latest Wall Street professionals to join the chorus of naysayers and skeptics, including much luminaries as David Tepper and Stanley Druckenmiller claims. In an interview with the Financial Times, Manolo Flauco, Citigroup's co-head of investment banking, said that the financial markets were way ahead of reality with tougher times to come, and is warning corporate clients that they should raise as much money as they could before the pandemic's true cost is factored in by investors. So we haven't even get the real numbers yet coming in, family, for what the real damage was from this coronavirus thing, whatever they call it. Alright, so be expecting the true numbers to come out and everything to go absolute haywire when the real devastation numbers come out, alright? Alright, family? Alright. And we're going to switch over to an article that came out yesterday, which was on a Sunday, March 31st, the last day of the month May 31st. Alright. The largest ever physical transfer of gold. 2 months ago, when the market was in a state of total chaos and results of sudden collapse of global supply chains due to the hasty coronavirus lockdowns, as one market saw unprecedented turmoil was that of the physical gold. Remember, family, there's a difference between the ETF and physical markets, alright? ETF is electronic traded funds. That's where the futures contracts come into play. Futures contracts are number what they guess the price is going to be for the future, and that's where they dump lots of paper contracts on. Alright? There's a big difference between paper contracts, ETFs, and the physical gold. Remember, physical is what you can hold inside your hand. Alright, family? Alright. As we point out in late March, due to sudden breakdown in physical gold supplies at the world's top gold refiners, those located in the southern Swiss town of Tinico, Ticnio, namely Valcambi, Pampa, Aragor. He's seen the Aragor ARGOR hyphen AEUS suddenly stopped producing gold. The result was a record divergence in the gold price versus divergence in the price of spot gold versus future contracts. All right, family. All right. So the resulting record divergence in gold futures versus spot in some way analogs what happened in the price of the prompt or West Texas oil index contracts in April, when the May West Texas contracts traded as low as $40. All right, $40 a barrel. As traders were willing to pay buyers to store oil in a world where there was suddenly no space for a physical commodity, unleashed a flood of physical gold into the U.S. as a record scramble by traders rushing to take advantage of this arbitrary opportunity by shipping bullion to New York, sparked what Bloomberg said. Maybe one of the largest ever physical transfers of the metal. All right. Finish up with this topic here. The flows into New York are unprecedented. Alan Finn, the global commodities director at the logistics and security provider Malika Amit, told Bloomberg that his company teams in New York have been working 24 hours a day to cope with the unprecedented demand for physical gold while navigating lockdowns, flight disruptions, and social distancing. In late March, no less than 550 tons of gold, worth $30 billion in today's price, or roughly equal to the gold mine output in the period, have been added to the COMEX warehouse stockpiles. All right, hundreds of tons of that were imported. On its own amount, the gold would represent the 11th largest sovereign holding, larger than the ECB's physical 504.8 tons of gold. All right, family. So gold is pouring into the United States. People are expecting the worst. The U.S. government has been secretly buying up gold left and right in preparation for what's going on. All right. And so, family, that lets you know that something big is about to happen. We need to concentrate and get ready, family, because most likely the paper currency. We're not predicting here. We don't predict anything on this channel, family. But just get you know, if the U.S. is importing tons of gold larger than the European Central Bank is, that lets you know that something big is about to happen, family. All right. All right. So, family, we're gonna switch over here to our final topic here. This is coming from shadowstats.com. This is from John Williams, his website, shadowstats.com, and we're gonna take a look at. All right, we're gonna take a look at this article. This article he posted on May 28th. Weekend May 23rd. New claims for unemployment continue to surge at a slowing pace amidst continued month-to-month economic decline. All right, by the Department of Labor, where May 2020 headlines, unemployment will likely be reported around 27 to 28%. Family, if you knew what was going on before this whole thing happened, you could tell the sense was going on. If you got in places like California, New York, Chicago, you can see, even down in Atlanta, family, you can see loads of people who were filing for unemployment, temp job services, people who had lost their homes. All right, family, the unemployment is way more than 27 to 28%, family. The true numbers, we're looking at about around 35% unemployment in the U.S. That's higher than the Great Depression era. All right, after the stock market crash in 1929. All right. All right. The slowing pattern of aggregated continuing claims suggests a possible topping pattern in June. All right. That is it, family, for that one. We're waiting for the jobs markets, the job numbers to come in for the month of May. More likely, they're going to come out with a number, and then it's going to be revised down a few months later. They always do this. They come out with a number to try to save face, and then all of a sudden, a few months later, they revise that numbers down, and it goes unreported. They may say a blimp in here and there, and then it goes unreported. All right, family. So, want to thank you for joining us for edition of Melanin Economic News. Alright, family. Special words. Stay safe out there, family. Things are going to get much worse before they get better. Take care of each other, family. Alright? Please be safe. Take care of each other. And we'll see each other after the darkness, alright? The night is darkest always just before the dawn. Alright, family? Take it easy. Be safe, family. Let's take care of each other. Let's get it started.